The winner in autonomous is going to have the most data and the highest quality data. That company right now is Tesla.
Because if you can have residential solar combined with residential storage, combined with software that allows an individual person to very simply understand how much energy they've generated, understand the economic value of that energy, and then contribute it back into the grid at times where you don't have to build peakers and you can do load smoothing, you're going to take $1 trillion of power infrastructure and just incinerate it.
This video is pretty much going to be an explanation why I think Cathie Wood and Chamath Palihapitiya are correct about Tesla. And I'm going to show you using numbers and actual data why this is the case. I hope you spend the next 5 minutes with me. I'll see you after this.
My name is Tom Nash, and I quit my corporate job as a senior financial analyst to break down companies for you. If there's one thing you need to know about me, I don't take bullshit from anybody.
So I hope you stayed with me, and if you did, thank you so much. My name is Tom. I used to be a former senior financial analyst. Now I'm a full-time YouTuber talking to you about the stock market, the financial markets, and today about Tesla. Now here's the thing. Between the bears and the bulls, most of them actually agree that Tesla is a good company with good products. However, here's what the bears get wrong about Tesla. And even though a lot of the bears actually like Tesla, like the cars, like the company, they get one thing or maybe two things wrong. And these two things are highlighted by Cathie Wood and Chamath, each separately, by the way. If you ever listen to Cathie Wood or Chamath, you hear different points of perspective. While Cathie is very, very high, not literally, very, very high on the Robotaxi aspect of Tesla, Chamath is extremely excited about the energy side of Tesla. And I think both of them are right, and both of them actually talk about something that sets Tesla apart from the rest of the market and actually gives the justification for a potential $1.5 trillion company. And I actually believe in this. Let me show you why. So let's talk about these hidden catalysts that the bears misunderstand about Tesla that may propel Tesla into the 1.5 trillion range. So first of all, Robotaxi. Now here's the thing. A lot of Tesla fanboys misunderstand Robotaxis. Let me be clear about this. Robotaxis are not coming this year. They're not coming next year. Most likely they're coming in 2023. So there's a lot of time here until it actually becomes operational, and then it's a completely primal market that needs time to grow and develop. So probably in 2023, we're looking at about $1 billion worth of market, but the growth is going to be phenomenal. And here's the good news for you Tesla fans. Tesla is pretty much in the pole position in this market to take over completely. Because here's the thing, robotaxis are essentially who wins the autonomous driving game. Now, if you take a look at the amount of data Tesla has, it's pretty much mind-blowing how much it's bigger than anything else. Tesla currently has 15 billion miles of quality data on their systems. Now, the second place is Google with 25 million. Tesla is so far ahead of the competition as far as full self-driving data that I can't see anybody catch them. Hence, I'm pretty much convinced that Tesla is going to be the front runner in the Robotaxi game, giving them a lot of future value. But here's the thing, this is future value. Now, you know what's not future? The energy game. And while Robotaxis might be a couple of years away, the energy market is already being disrupted by Tesla as we speak. And it might be actually just as big or probably even bigger than the automotive section of Tesla. I know that you heard Elon talk about the fact that they're going to be on par. The energy business is going to be as big as the automotive business. But let me tell you, based on the numbers that I'm seeing, the energy business has much bigger potential, much bigger upside than the automotive industry can ever have for Tesla. Now, here's the thing. If you just take a look at the US automotive market, it's an $80 billion market. But how big is the electricity market in the US? The actual energy for residential, commercial, and industry. It's $400 billion. It is literally 5 times bigger than the automotive industry. So right there and then, the total addressable market of the energy business of Tesla is already 5 times bigger than the total addressable market of its automotive division. Not to mention the fact that if you look at it globally, it's a $3.6 trillion business per year. It's massive. Speaking, of course, about the energy business. And that makes me think, Well, how far along are Tesla with actually producing, storing, and distributing renewable energy? And let me tell you, the numbers are quite surprising how advanced they are. Let me show you. And here's the best thing about Tesla. It's no longer just limited to storage. It's already leading the pack as far as production, generation, and distribution of a renewable source of energy, which is completely decentralized, deregulated, and free, which makes it cheaper, more readily available, and much easier to supply. Win, win, win. Here's some numbers for you. In Q4 2020, the Tesla storage deployment business increased by 200% year over year, 100% quarter over quarter. The energy business alone grew by 30% year over year. Solar installments, 60% up quarter over quarter in Q4. And these are pretty much just US numbers. Imagine what will happen when this goes to Asia. They're getting ahead of the curve again in a brand new industry nobody understands even exists. Tesla is slowly becoming pretty much the only solid competitor in the production, storage, and distribution of a decentralized, deregulated energy. This has not been done before, and nobody will come close to them because they're so far ahead again. And much like it happened with the automotive industry, eventually people will catch on, but it's going to be too late. And the numbers don't lie. Let me show you. These are the Tesla 2022 predictions. Kudos to Ronnie, one of my subscribers and patrons who made this. Essentially, these would be the 2022 numbers we're going to be using for the DCF. These are the predictions. So 20,000 semis, 2022, 400,000 Model 3s, 600,000 Model Ys, 12,000 Cybertrucks, 150,000 Model S, 3,000 Model X, no Roadsters, 540,000 Powerwalls, which is completely plausible with how this is growing right now, 20,000 Power Packs, 60,000 Megapacks, 80,000 Solar. Total revenue, 126 billion. Now, as you can see here, Ronnie actually did a multiple and got an 884 just based on sales multiples. So right there and then, you can see that even he thinks that the company is insanely undervalued. But what happens if you take these numbers and you put it into an actual DCF? So this is exactly what I did. Right here, you can see my assumptions. Essentially, a 22% EBITDA. This is the 2022 revenue, the EBITDA. 2024 is where I assume that Robotaxis will start. 2021 growth versus this year is 30%. Then 2023 and so forth, a 40% growth. CapEx for 5 years is $22 billion. Of course, we assume no tax breaks, no regulatory credits, nothing. No carry forward of NOLs, which is kind of insane to assume, but it's a very conservative model. Nothing, just straight up numbers. And as you can see right here, what we got as far as the numbers is a 10% discount rate, giving us these numbers for the next 5 years. If you translate it based on a 4% perpetual growth and a 25x multiplier, given the amount of cash and debt the company currently has, this is the price target you'll get. $1,465 per share, giving us 117 upside. 117% upside for Tesla as we speak. Now that's based on pretty rational numbers, 10% discount rate, 4% perpetual rate, nothing out of the ordinary. And here's the thing, for this target price to make sense, you only need to believe in one thing. You have to believe that Tesla still has a lot of disruption left in it beyond just selling consumer automobiles, meaning the Robotaxi business from 2024 and the energy business as of this year and next year. Now, if you believe the vision, this price makes a lot of sense, which means that this dip is probably a great opportunity to get in on a very exciting, very disruptive company. But as you know, this is not financial advice. This is just for fun. This is just for entertainment. And beyond it all, it is just my opinion, some dude on the internet. You know, it might be inaccurate, might be wrong, might be the ramblings of a madman. You have to do your own research, allegedly. Blah, blah, mother effing blah. We'll see you guys in the next video.